Hi YouTube, it's Janelle here, also known as MissBeHelpful. Now, the last video that I posted on this channel was about which savings account is going to be the best account to get the best interest rate in 2020. So what is the reason why your savings rate even matters? The answer in short is inflation. Now, when I was younger, I had no idea what the word inflation meant. I might have heard it in school, or maybe people say the word inflate. I mean, when I heard that, I would just think about a balloon, like you're just putting air into a balloon and it gets bigger and bigger. That's what inflate meant to me growing up. Like, I didn't really understand the concept in economics of what inflation means. But now, as an adult, I kind of understand it better because I have a little bit of like my memories from my hindsight from being a little younger, and now I could compare using my money to buy things today compared to when I used to buy things when I was younger. So the example that I always like to use is when I was in middle school, when I was in high school, I would go to the store and I would buy things like a pack of Skittles or a pack of M&Ms or a Snickers bar or a Twix bar. And things like that used to cost like 50 cents. Today, in 2020, if you go to the store to buy a Snickers bar, bag of Skittles, or whatever candy, it's gonna cost like $1.25, maybe even $1.50, depending on where you go buy these things. And the reason why is because of inflation. That is literally the easiest example to explain to somebody. It's one day, something costs a certain amount of money, and after a few years, every year, little by little, the price just keeps going up and up and up. Now, the Snickers bar does not change. It's that same Snickers bar. It's not like they're putting extra chocolate or extra peanuts or extra caramel. Like, it's the same product that it used to be, except the price is bigger. The price is more expensive. So why is it that the cost increases even though the products stay exactly the same? You don't get more Skittles in the bag. You don't get more M&Ms, right? And so the reason why is because of something called purchasing power, which is literally directly connected to inflation. So if I put $100 in my savings account today, or in a checking account, or really anywhere, if I put $100 in a bank and then I wait a year, when the year passes, if I go back to that savings account and I still have $100 in there, it's actually not the same value as it used to be. It's not worth $100 of buying power. While you still have $100 in there, the buying power or the purchasing power of those $100 is only about $98 worth of purchasing power. So that means that while you used to be able to buy things that cost $100 with $100, now in order to buy something that costs $100, you're gonna need $102. You're gonna need to have 2% more dollars in order to get stuff that costs the same price. And if that 2%, which is the inflation rate, if that inflation rate continues going every single year, then that means that in 5, 10, 15 years, you start to see things like something that used to cost 50 cents now costs $1.50, because that little 2%, it really does compound and add up over time. It keeps on increasing, and that's what affects the way that, we pay way more for things now than we used to pay for them before. So what does any of this have to do with your savings account and the interest rate that you get in your savings account? Well, if you think about it, the whole point of putting your money in a bank is to, one, protect it, make sure that you don't have it under your mattress or in a shoebox and anything like that. And then two, to make sure that you can access it, but also that it grows. So you go to the bank and you know that your money's going to be there. It's guaranteed to be there. It's insured by an FDIC insurance that hopefully all the banks that you're using have, or credit unions will have their own credit union insurance as well. The whole point is make sure your money's protected and insured. But then you want to make sure your money's growing, right? If you leave your money in your house, $100 after a year is going to be the same thing. But if you put it in a savings account, it'll go up a little bit based on that interest rate. And so my whole point of trying to say, you guys try to get 2% or more, is that if inflation is 2% and you have 2% interest in your bank account, then you think that your money is growing by 2%. But really, it's not. So let's say at the end of the year, your $100 is now $102 because your savings account gave you 2% interest. That's great. But then inflation kicks in, which means that it takes away 2% of the value of the dollars in there in terms of purchasing power. So now you're back to $100 worth of purchasing power, which is not so bad, because at least $100 a year ago had $100 worth of purchasing power, and now it still has that same amount of purchasing power, which is good. But if your savings account only has 1%, then when that year passes and 2% inflation kicks in, you actually don't have $100 of purchasing power. And so that's why, in order for you to really keep up with inflation and compete with it, in order for your $100 to always be worth and have the purchasing power of $100, you have to at least be getting the inflation rate, which right now is about an average of 2%, which means your savings account has to be giving you at least 2% back in order to combat inflation or to just meet inflation. So the inflation rate hits 2%, at least your $100 that you put in there a year ago is still able to get you $100 worth of stuff. So that's why I think it's so important for people to pay attention to that interest rate in your savings account. It's not just about trying to make money out here, trying to, grow that bank account. I mean, we're talking about 1%, 2%. You're not going to grow your money that much with these tiny little interest rates. But at least you can keep up with inflation and you can make sure that your money is not going backwards. It's not losing value. It's not decreasing in purchasing power because it's just sitting in a checking account which doesn't give you any interest, or because the savings account that you pick is like 0.01 or 0.03% interest. So you're getting pennies back, and then inflation kicks in and your money is literally being worth less and less and less money the more it sits in that savings account. So when I say, if you're banking with Bank of America, if you're banking with Chase Bank, if your savings account is at those banks, you out here slacking. I'm not trying to attack these big banks for any other reason except the fact that they can afford to help you be able to match inflation and keep your $100 worth $100 over the course of a year, but they choose not to. When you put your $100 in a savings account at Bank of America or Chase Bank, they use those $100 to make a loan to somebody else. That other person is paying 4%, 5%, 6% interest for that loan, right? If it's a student loan, or maybe even like way more if it's a personal loan, maybe 9%. So on average, they're making between 4% and 6% off of your $100 that you put in the savings account with them. Yet you only get back 0.01%. You only get back a penny or 3 pennies, even though they're making $4, $5, or $6 off of your money. For them, it works great because it's a nice business model. They're bringing in a lot of money. And when they do this across millions of people, billions of people, then great. Yeah, they're bringing in a lot of money for themselves. But what are they doing for you? Your $100 is decreasing in purchasing power instead of at least keeping up with inflation or having more purchasing power. So that's why I posted that video. That's why I push this interest rate stuff so much, because at the end of the day, it's the worst case scenario. If you think that you're making money by putting money in the bank when you're actually losing purchasing power on your money. That's the worst case scenario. If you know you're losing purchasing power and you don't care, or you don't mind, or you're willingly continuing to put money there, fine. I mean, you're making that choice. I don't know why you would do that, but hey, at least you're fully in control and aware of the decision that you're making, and you're making that choice for yourself. But trust me, when people don't know, and most people who have their money in these bank accounts don't actually know. So if you don't know, it's not fair, because kind of like you're making this choice uninformed. You're unaware. You don't really understand the math. You don't understand the inflation and the way that inflation affects your money. So that's when I think that it's unjust. That's when I feel like there's something that's not right going on here. And trust me, the banks are not doing anything to try to educate you on it. So that's why it's important for you to educate yourself, for you to get on YouTube channels like mine, for you to get into books about personal finance, for you to understand savings, banking, how it all works, because at the end of the day, they're going to play you if you let them play you. So you have to make sure you come in aware, informed, empowered to make the best decision for you, your bank account, your money, and for your goals. So if you didn't know this, hopefully this video was helpful and informative. And if you already knew, great, share it with somebody that you think might not know, so that it can help them understand why this interest rate stuff is so important in the first place. Because even though it sounds nerdy, at the end of the day, it's not just for nerds, okay? It's for everybody, because everybody wants to make sure that their money is worth the same amount at the end of the year as it was the year before. So, or hopefully worth more. So, that's what I have in this video. I hope you guys comment below. Let me know what you think. Give this video a thumbs up. Post it on your social media. Share it with other people. Spread that link around. And if you're not subscribed to this channel, I don't know why are you still watching me and you're just sitting there. Press the subscribe button, because I post videos every week on my channel. And hopefully these videos help to keep you informed, help to update you, help to just, engage you in things that have to do with money, because I know there's a lot of stuff out there and it could be confusing, but this channel is purely educational. So hopefully you just are learning as you come back every week to watch more videos. I'm on Instagram, I'm on Facebook, I'm on Twitter. So find me on social media, add me there, follow me there. You can email me actually directly too if you have a question or comment, and that's at MissBeHelpful@gmail.com. And then I also have a Google Voice number where sometimes I take Q&A questions and put them right here on my channel. So if you have a recorded message that you want to leave me with a question or a topic that you want me to cover, call the number on the screen, and then I might post your voice right here on my channel. So come back and look out for that as well. But that's pretty much what I have. So till next time, peace.